Hello traders. Welcome back to our channel. Today, we have an exciting video in store for you. We're going to delve into a powerful trading strategy that combines the MACD indicator and the crossover of two exponential moving averages (EMAs). We'll be using the user-friendly platform TradingView for our analysis. So, let's jump right in. Before we dive into the strategy, let's quickly review the two indicators we'll be working with, the Moving Average Convergence Divergence and Exponential Moving Averages. The MACD is a versatile indicator that helps us identify potential trend changes, momentum shifts, and possible buy/sell signals. It consists of two lines, the MACD line, which is the difference between two EMA, usually 12-period and 26-period, and the signal line, which is a 9-period EMA of the MACD line. Exponential moving averages are used to smooth out price data and identify trends more effectively than simple moving averages. We'll be using the crossover of a shorter-term EMA, 9-period, and a longer-term EMA, for example, 21-period, to determine our entry points. Now that we understand the indicators, let's explore how to use them in a trading strategy. We're gonna try the strategy in a British pound versus US dollar on a daily time frame. For a potential buy signal, we'll wait for two conditions to be met. First, we want to see the MACD line cross above the signal line, indicating a bullish momentum shift. Second, we'll look for the 9-period EMA to cross above the 21-period EMA, confirming the upward trend. For risk management, it's crucial to set a stop-loss order below the 21-period EMA. This protects us in case the price reverses unexpectedly. Finally, we will place the take-profit order at 2.5 times the risk. Now, let's see how the trade runs. On the flip side, for a potential sell signal, we'll look for the MACD line to cross below the signal line, signaling a bearish momentum shift. Simultaneously, we'll wait for the 9-period EMA to cross below the 21-period EMA. For risk management, it's crucial to set a stop-loss order above the 21-period EMA. This protects us in case the price reverses unexpectedly. Our take-profit order will be set at 2.5 times the risk. Now, let's see how our trade runs. Finally, I'm gonna share some tips to avoid false signals. We only had to add another indicator, the ADX. Let's make some changes in its settings to have a better view. Now, there's a new rule. We only trade long when ADX blue line is above the red line, and we only trade short when ADX blue line is below the red line. In this way we make sure that we are trading in the same direction as the main trend. And there you have it, traders. A comprehensive trading strategy using the MACD indicator and the crossover of two EMAs. Remember, no strategy is foolproof, so always practice proper risk management and continue to refine your skills. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell. Happy trading, and see you in the next video.